fills up those orders. The reaction is key. As soon as price breaks and closes below the failed reaction line, you now have a demand to supply flip. We also obviously broke structure, we broke those lows, and then price comes back in to fill up that supply, and then we continue down, okay? So you obviously can refine that to the pivot as well. Is that a trade I would take? No, because if I bring it back, remember, not clear intentions. It looks obvious in hindsight, but at this moment, I could potentially see that, we're coming off the extreme of the bottom of the range here. There's demand here. We could easily just push up higher. So that's why I stay away from stuff like this, and I try and keep it, to the obvious stuff, right? Cool. So let's see what happens now, and play price forward, and we start to, really dump. Okay, I think we get a swing breaker structure. Yep, we do. Happy days. So now we have a new M15 swing range. Okay, so this becomes the highest point that broke the low. That becomes our new M15 strong swing high, right? Yeah, cool. So at this point, nothing going on. We've got this big sort of spiky candle. There's nothing great there. Actually, I just spotted an example of a sort of a fractal flip, which it's not something I'll trade, but it's just for you to have that deeper understanding of price action. We had this demand here, right? Price came in, it reacted, and it pushed down. So that's your fractal zone on a lower time frame, and then price came up and mitigated that flip, right? Where supply took control of that level of demand. Again, you have one here as well, but price ended up spiking up through that. But yeah, cool. So nothing here I'd really trade. This is where I'd be patient, either wait for price to pull up to here, or wait for price to revisit our 4-hour demand zone. Because remember, the higher time frames is what you're gonna be focusing on, okay? Patiently look to see if price is gonna come down to this 4-hour low, right? It's people doing the dumb stuff in between, like trying to short down here or trying to force things. There's nothing really going on here. Compare that, trying to trade counter trend here to here. There's nothing here yet, right? So just be patient. Okay, just chopping around. Okay, get a break of these lows. Not really a swing pullback relative to recent price action, so I'd call that more of a bearish IBOS, okay? So got a little bit more structure to work with now. So potentially let's reassess this and see, can we see anything going on? So we have that extreme mitigated. So zoom in a bit. And then sort of our mitigated single candle pivot would be this level here, right? That led to the IBOS. Now, this is where this is unnecessary. You don't need to do this, but you can recognize that this is also a flip, all right? Because what do we have? We had demand here, right? That led to the break of that high. So price comes into demand, it reacts, fails to put in a higher high, right? Never breaks the high, and then price pushes down. So here is your failed reaction line, right? That's where it is. That's where the failed reaction is, okay? The reaction fails to put in a higher high, and then we break and close below, okay? So you can draw it from the low of the reaction, or you can refine it to the pivot, right? That's your flip. But you see what I mean? It doesn't really matter if you notice these or draw these on. It doesn't give you an extra edge necessarily. It's just, if you can spot that that's the, the structure zone, just so happens that it's also a flip in this instance, okay? Cool. So this is a potential area in which you can look for longs, okay? Now, if you're going to short this and take this as what we call a risk entry, probably personally want to cover those highs and be a little bit wary, because it could mitigate something within that wick. But I wouldn't push it too much further, because remember, although you're trading pro internal trend, after that swing boss at any point, we could have a deeper pullback, right? So you kind of want to look for a quick move here. Let's see how this goes. So you'd be tagged in. Again, a little bit messy here. We have had a bit of a shift there, so it's not looking great. There we go. I'd be in and out with that trade. Wouldn't push it any further than those lows really. Or if you use a fixed R, then 4 or 5R maybe get it. But there we go. Let's just keep it relatively conservative. That's a pretty simple trade, right? Okay, now price action is really getting messy. I'd be kind of staying clear of this and just waiting for price to come into our 4-hour demand level and seeing how things potentially shift from there. So we mitigated in here. Let's see if we can start to clear out some of the structure and clear out some of the supply before we look for longs, because order flow is completely bearish at this point. Okay, let's see. Okay, big boom, shift in structure there. All right, we've got the bullish IBOS. Supply has clearly failed. Nice shift in structure. Let's have a look at the 4-hour chart and remind ourselves again what's going on. So where are we on the higher time frame? I'm just going to hide this daily chart as well, just to this daily zone, just to keep things a little bit clearer. Okay, so 4-hour chart is bullish, right? Swing pullback, swing high, and we've now pulled back into the extreme level of demand that was unmitigated. This level of demand is the last line in the sand. This needs to hold if the 4-hour swing trend is going to stay bullish, okay? Actually, also something I've just realized as well is, look, this was the extreme of the reaction leg of that flip zone. So if we look left in here, is there a 4 hour zone? Look at that nice 4 hour zone within there, in that daily zone. Just draw on quickly. So you see that? Again, this is unnecessary. You don't need to look back and do this all the time, but it's just to show you what's going on here, okay? So 4 hour came up into that supply zone within daily supply zone. It reacted from supply, so the reaction is key, but what did it do? It really kind of failed to break that low, right? It just came back, facilitated the pullback into demand, and then pushed higher. So where is the flip within there? And this is where I think it can get very messy if you're drawing all of these on, and you don't need to. But it's essentially from the high to the low, that's your whole flip range, right? Which is what that daily zone was, which we've already drawn on. So this, if you ever hear me say the extreme of the reaction leg, that's what I mean by this, because this is the reaction leg, right? The reaction from supply, and this is the extremity of that pullback, right? That zone. And these can be really, decent zones right at the strong swing low. So, if you're going to take a 4 hour entry, this is the time I should do it. It's pro 4 hour trend. It's the unmitigated extreme. It's a flip, really high probability. And look at that. You can get over 5R to the high, right? Now, whether it gets there or not, I have no idea. But this is the type of trade which over the course of a year, I can't give you any guarantees, but I would be extremely surprised if you weren't profitable. Now, some of you, especially if you're day traders or you trade in the M1 and whatever, you can add this to what you're already doing. If you do this in just a few pairs, right? Because these setups aren't going to be super frequent on the 4 hour chart. They're not always going to come by every day, right? But if you can add 5, 6R at a time like this, 100K account, that's 5K, 400K funded account, quick maths, 20K, right? Like, you get a few of those a year, that's going to add some serious returns to your overall portfolio. And it's simple, right? Like, even if you didn't even look left, you had no idea that there was supply here, and you literally were just looking at the 4 hour structure. We've come into the extreme. It's not mitigated zone. I'm going to set my order. You knew nothing about flip zones. You knew nothing about liquidity. You just know how to draw your swing structure and identify this unmitigated zone. This is what I mean. Trading can be very, very simple, right? Sometimes adding all these fancy bells and whistles can be a bit unnecessary. Now, again, these aren't going to come across every single day, and sometimes you're going to take losses, of course, like if you entered long on this one. But these, I'm just trying to kind of encourage you to not turn your nose up at them. If you're, I'm talking to myself here as well, get too caught up in trying to trade, the lower time frames and things. This can be a really nice addition. Anyway, so what we're doing in the M15 is we come into a high probable level in which potentially that 4 hour swing high low could form, and which potentially we may come up here. Now, it's not a guarantee, of course, because the 4 hour internal structure is now bearish, and it could just be to facilitate an internal pullback into supply before continuing lower. Because the 4 hour chart may be ready to switch bearish. Why? Because if we look at the daily chart, remember, it could be ready for that deeper swing pullback. So we have to bear that in mind, right? Now, what do we have from this level of demand? We have a bullish change of character here on the 4 hour chart. So we have even more confirmation, right? That little fractal supply has failed, right? Where that inside bar supply was, we've now pushed up higher. So now we have fresh 4 hour demand. Basically, we have a confirmation entry of the 4 hour risk entry. If you wanted to take this entry now, we've got another entry there. And now let's have a look on the M15. Let me just make sure it's appearing there. Okay, it should do. There we go. Okay. So let's put it forward a little bit, and we have that nice movement up. Okay, so 4 hour zone, M15 internal structure has now shifted bullish. So from an M15 perspective, yes, it is still bearish on the swing structure. If you didn't view this as a swing pullback, we are still bearish, okay? But remember what we talked about in the previous S&D structure zones video, where we started to look at that multi-time frame market example. There are going to be times when trading counter M15 trend is high probability, and it's when you think you're capturing the next 4 hour pro trend move, right? We've come into that 4 hour level, so this is the time now on which to be aggressive against the M15, okay? So let's zoom into this level and see, nice, clear, obvious zone. For those of you who know about liquidity, you'll see that we just about swept the previous low, so that adds a nice bit of confluence to it. Now, admittedly, this move was occurred by NFP. NFP is non-farm payroll. It's typically a very high impact news fundamental announcement for the US dollar, which we see high volatility on the first Friday of every month, I believe. And typically, I definitely won't trade the news. I don't trade around it. And I typically don't bother trading after it because it's Friday afternoon. I don't even trade New York as things stand at the moment anyway. And I don't want to hold positions over the weekend. But this was a really good price action example. And it's literally just happened as of 2 days ago. So it's good to go over it. But yeah, quick recap. 4 hour zone, we're expecting the 4 hour high low. We're expecting the next 4 hour move. Clear shift in structure. M15 internal is now bullish, loads of risk reward to target. So let's, this can be your M15 entry now, right? That's what you could classify this as your risk entry. Again, you could enter on or within the zone. It's up to you. Quite a big stop, but you've got, you can do fixed 5R. Again, if that's within your rules, you could look to try and capture this as a 4-hour move. It hasn't drawn on the 4-hour swing high for me, but that would be where you're targeting, right? And you've got a nice 12-hour position there, okay? So what I'm going to do in this instance, I know we've only been talking about M15 entries, but for those of you who want to trade the lower time frames, now we can drop down to the M1. I'm just going to hide this so we can keep it clean, okay? So now as you're trading M1, what are you doing? You're using the M1 to confirm the M15. You're not just sitting on the M1 all day trying to see M1 flips. You're doing this to literally capture that M15 entry, but on the M1 instead, right? See how we use the M15 to capture the 4-hour entry, but using the M1 to catch the M15, right? We're not just sitting on the M1 to catch M1, if that makes sense. So here you have the M1 extreme zone. So technically you could take a trade on that, right? If you really like the position, the idea, right? Following on from that mitigation there. But let's wait for a little bit more confidence. So bare minimum I need to see for the confirmation entry is I need to see structure shift in the direction in which I want to trade, right? So that's the level and high in which I need to see to go. And obviously see that supply level fail as well, okay? Cool, so we react from demand, not do anything until we see that bullish chalk. Okay, now we have the bullish chalk. What also do we have? We have a flip. Hopefully you can see it, right? It's the exact same thing. It happens on every time frame. Price comes into supply, it reacts. The reaction is key, right? Needs to see that reaction. Price then closes above there. So this would be your FR line, your failed reaction line, if you want to draw it on, if it helps you. But remember what I said, I only care once the structure shift occurs as well. So now we have the candle closure above the failed reaction and we have the structure shift. So now you have your flip. So you can draw it from the top of the reaction to the bottom of the reaction, okay? A little small detail I'll add, and this will, now I've seen the bare minimum I need to see, right? So all the let's say criteria has been ticked in the box. What will come with time and experience is maybe when you want to see just a little bit more. So for instance, you might want to see, okay, we've just wicked the high, but maybe you want to see price really commit. Again, I'm not going to tell you what you need to do. That's going to be up to you, okay? But obviously the more that price kind of goes up, the better it can be. But that's just what I'm saying. At that moment, I've had my bare minimum. You can set your order and there you go. So you could take the whole range. Some of you might want to be a bit more refined. Again, that's going to be up to you. You're testing what you find. The more refined you are, the better the risk to reward, but the increased probability you don't get tagged in. So I'd probably advise for most of you, if the range is pretty much almost the same size as the pivot, probably just take the range, increase the amount of trades you're getting tagged into. It's probably going to be better for your psychology and your experience initially. That would be my advice. Obviously, if it's like a massive range, like if you had a big pullback like that, then yeah, you're probably going to want to refine it to here rather than taking the whole range. But in this instance, it's pretty much the same for the sake of a couple of pips, or as people like to say, don't be a prick for a tick, just get in the trade, right? There's obscene amounts of potential risk to reward if the trade idea is right, which takes a little while, but then eventually we go, okay? And there we go. So yeah, not really too much else I can add to it, really. That's kind of everything I wanted to cover. Hopefully you can kind of see it's the same things again and again and again, just waiting for confirmation, waiting to see where that battle of supply and demand is. And there you go. So this trade hasn't fully played out. I'll just kind of bring you to where we are with current price action, how we ended the week, and we shifted bullish on the M15 with a decent amount of momentum. So it is looking good. It is looking like, obviously that's not the swing high anymore. It is looking like potentially now we have the M15 has switched bullish, okay? The 4-hour, we go back to the 4-hour chart. We've mitigated that with strong levels. The 4-hour internal structure has now also shifted bullish, which was a really good sign. If this now is going to take out the 4-hour weak swing high, right? Because now we have the internal structure and the swing structure realigned. So now what the expectation would be, because this is a strong 4-hour internal low. So now the expectation is that the internal structure should remain bullish until it takes out that weak high, okay? So it's looking pretty likely that this high is going to go at some point, okay? So we do have obviously levels of supply in the way, but what would our expectation be with these supply levels? Our primary forecast would be that they're there just to facilitate pullbacks, if any, before heading higher, right? That was it. Now, of course, again, anything can happen, right? If you react and do that, I have no idea. We work with the framework that more likely than not, that's the move we expect, okay? Only other thing I'll add to this before I let you go, I appreciate this was a long video. I'm probably going to split it up into a couple of parts just to save your concentration and listen to my monotonous voice. But this is where things can, let's just say the more you learn, the deeper your understanding becomes a price action, and the more concepts you add particularly, it can sometimes lead to paralysis analysis. It's something I'm battling with all the time. It's probably something I'll always battle with, and you probably always will as a trader. The more you learn, the more it can help boost your risk reward, the more it can help boost your strike rate. But at the same time, you can end up just seeing things everywhere, and then you just end up not taking any trades because you want, something's in the way or whatever, and it can get a bit overwhelming at times. And this would be kind of a good example, which I'll point out, right? So we know we had this daily flip range. We initially came into that flip range and we reacted, right? So even if you keep it to the range or you refine it to the pivot, hopefully some of you have noticed what we've had here. What did that reaction to demand do? It failed to break the high. And then what happened? Then we came down and we closed below the reaction. So we've actually had a failed reaction here, right, to demand. So what does that mean? Well, that means that we've had a daily demand to supply flip. So we can take it from the low of the reaction to the top of the reaction. And that technically now is a daily flip. And it did actually also break structure because remember, this was the fractal low. So it did also cause a daily bearish chock there. Let's draw that again. All right. So this is where things can start to get messy. Obviously, we can refine that to, there as well, or the inside bar, right? So this is what I'm saying, right? Once you start seeing things everywhere, sometimes price action can get messy and there can almost always be something in the way. So when that happens, and this is what I say to myself every week, I have to remind myself is, what is your primary forecast? What is the more probable expectation? And as I was trying to say in the previous videos, it's just focus on the pro trend stuff, the predominant overall bigger structure. That is much more likely, okay? Because this is the bullish order flow, right? We can see we have not really truly disrupted this bullish order flow yet. Let's just clean it up a little bit, right? Yes, we've had a bearish chock, but this is the daily demand range that has not been violated. So the refined pivot candle has been price traded lower. We have had a bearish chock and we have had a failed reaction. But overall, like for me, the predominant order flow is still bullish, right? We've come in and now it's looking like we're going with momentum. For those of you who know liquidity as well, right? We didn't have a clear sweep. There's those low resistance highs that we can see, which price is probably going to target. So on the balance of probabilities, if I was a betting man, i.e. a trader, I would say that we're more likely to do that. But I'm also wary that we have had a flip. There is supply in the way. It did cause a bearish change of character. So there is some potential that we could roll over. And this is where trading gets tricky because you have to be able to hold both of those possibilities in your mind and either being open to trading both and just trying to, get long in the right area and get short in the right area and either take your profits quickly or kind of hedge yourself. Or now price is up here, you just, you don't want to take longs because it's against the supply. We got in long down here, we got in the time where it was on our favor, and now we just want to wait and see which way it's going to play out. Okay, but I just thought it would kind of be a good thing to talk about because it does happen. Sometimes the more you learn, the more you can end up just always seeing negative confidence the way. And it's just down to you whether sometimes people are happy, they don't care, and they're happy to trade through it. Other times people just want to sit in their hands until it plays out, and you only take the long when you're down here, and you only take the short when you're up here, and you just see how it goes. But yeah, on the balance of probabilities, I'd probably expect this to fail, and price should take out this high. Not should, but it's more likely to. But I also understand that if this holds and we roll down lower, I understand why. Okay, but I would say on all the confidence we have, especially with multi-time frame analysis, and especially now we've had the internal structure shift on the 4-hour chart, I would definitely think my primary forecast will be that we'll break up higher. But who knows? It remains to be seen. So it'll be interesting to see how this one plays out. So a bit of a long one. I probably will, as if you're watching this, you'll know, I'll probably split this into at least 2 parts. So yeah, watch this over and over again. I kind of tried to cover as many sort of parts as I could and throw in a little mini lessons with obviously the main focus being flips. But if I can end it on one key thing is don't overcomplicate flips, okay? Literally just even forget about them if you need to and just think about structure zones. Where was the pivot that led to a break of structure? Okay, that's always going to be step 1. And then it's a valid zone. And then if you want to see if it was a flip, just look back, what did we react to? Like, i.e., this is obviously a structure zone that led to the break of structure. Is it a flip? Like if you want to ask yourself, well, where did that pullback start from? Where did the sell to buy start from? That's where the reaction started from. Look left. Is there valid supply? Yes. Okay. And then we overpowered it, right? Obviously, that's a big example. Probably the cleaner example of kind of how we really use it with entries and is this. This is like textbook picture perfect was this example over here, right? Clear bearish structure. We come in, we react, we push up, right? This is the bread and butter setup. This is on any time frame. If you see that, that's what I like. Obviously, we have to pair it with all the other confidence, use it in the right area, etc., etc. But this is kind of what I mean when I fall asleep at night dreaming of flips or having nightmares of them, whatever way. Okay, this sounds a bit weird, but yeah, that's what I think of. Like that was what I would have stuck on my wall, sort of thing, as a textbook example. But yeah, I'll leave that there before I rabbit on any longer. I hope you guys took some value from that, and I'll see you in the next one.